Is your small community bank in trouble? Could there be a continued run on banks in the United States of America, now expanding into Europe? These are questions we should all be asking. In a recent Senate committee hearing with Janet Yellen, she did not leave any promises that small community banks would be safe from runs and from total collapse. More so, the government will support, and she stated, the bigger, larger banks. And all those banks happen to be in the same bed, wanting the same things in a CBDC that this government now wants to implement. Let's take a look at that today in DeFi IoT. Welcome back. Good morning, good afternoon, good evening, wherever you are. DeFi IoT. What we try to do here is process a lot of information and take that process, bridge it down, and give it to you in a shorter version, leaving the links down below always. So please make sure your subscription's up to date. Before we get started here, hit the subscribe button. It's free. Hit the bell. We try to do 3 or 4 videos, sometimes more a week, to get out to you and stay on top of what's going on, not just in what's social economic news in crypto and how it affects crypto, or more so in defending our free market economy. We also expand into everything that facets that whole free market economy and that sustenance. So recently, over the last few days, there's been a Senate committee hearing with Treasury Secretary Janet Yellen on the bank bailouts. And we saw First Republic, we saw other banks being bailed out in Silicon Valley, these tech companies. Obviously, we assumed that tech companies were not going to be allowed to go under. Now, with the Dodd-Frank Act from the results of the 2008 collapse, also, by the way, it was when Satoshi Nakamoto created Bitcoin. And I will, as a side note, get back to Bitcoin, where Bitcoin's at right now, with the fear of the banks continue to collapse. Now, this bank collapse, this whole rollout, there's some blame being thrown back to the whole FTX collapse, etc. We have to understand something, that these were legitimate runs on banks. And these runs on banks were started and were created by, well, you can say social media, but it was done by the actual people that are now taking control of those banks, which are the Fed, the FDIC, the Treasury, etc. This administration. There's a reason behind that, whether you like it or don't like it, agree or don't agree, but they all had something in common, and that was that they at some point or another supported the technology of blockchain, which is where crypto comes from, and or they've supported platforms that allowed people to change their money from crypto into a fiat currency 24 hours a day, 7 days a week, which we know the banking system doesn't work that way. It works 9 to 5, close on weekends, close on holidays, etc. Now what's happening is you're having a huge consolidation. In order for a CBDC, a central bank digital currency, to be introduced, you're going to have a consolidation of these small banks that can be on the fringe and not in line with the players that be. In other words, this stems all the way back to the World Economic Forum, who has the teeth, who stated that we were going to have a new crisis, a new pandemic would be financial this year, the next 2 years. Wow, that was in January. Coincidence? I don't know. Maybe you guys can comment down below whether you think it's coincidence or not. But we think actually now there's a collaboration of certain entities, because they're the same groups of people, United Nations, World Bank, IMF, and those policing powers that are non-democratically elected powers that be in the world are now going to issue out to us how we can run our finances and our freedoms for that part. Back to small community banks. The question was asked by this senator from, if I believe it was from Oklahoma, if I'm not mistaken. I'll put the link down below too as well. Another good YouTuber. You can see the link there. The question was asked, another reliable source. The question was asked, will the FDIC, okay, that's the Federal Depository Insurance Committee, will they, who comes in and insures our bank accounts up to $250,000, right? Will they support small community banks? He asked, can I take back to my state and say, all the banks in my state are going to be insured. And Janet Yellen could not answer a yes or no answer. This is the Treasury Secretary, and she's clearly stated that we decide what banks get bailed out, and I have a larger voice in this on what banks will be bailed out and not bailed out. Now, we see that those coming to the rescue are your big banks, right? JP Morgan, your Citibank, your Bank of America, Wells Fargo, these big banks that are already in line. And by the way, Citibank, Wells Fargo, and Bank of America are all collaborating with the Zcash and have presented Zcash to be the central bank digital currency in the future. What you're having now, the first phase of rollout coming in between April and July of this year, is called FedNow service. The FedNow service will be launched by the Federal Reserve to actually create a payment platform. And we'll do a video separately on that, so make sure you please give us a thumbs up and subscribe so you don't miss that. So back to, are your banks safe? The answer was, there was no answer. She could not say, and she would not say. All she said that the banks would receive, in so many words, preferential treatment. In other words, if in fact, and you guys can put your opinions down below, what you think, if in fact the whole bank run right now is caused by this administration, this government, and those in power collectively on a global end to bring around about the central bank digital currencies, if it is so planned this way, then the banks will consolidate. We're seeing a huge consolidation now. And you'll see smaller community banks begin to disappear. And people are finding that to be something of an insecurity for them right now. And people are actually pulling their money out of smaller banks and putting it into these big no-fail or fail-safe banks. Why are they fail-safe? Because the government will bail them out. Now, with the Dodd-Frank Act, remember that there would be no bailout, but there would be bail-in. So the smaller banks are going to be forced to bail in, while the larger banks that are playing ball and actually on board to eliminate all association with cryptocurrencies or crypto blockchain companies, right? That's those banks that just collapsed. That's what they did. They either dealt in those platforms or they supplied money, VC, venture capital money, etc., to these startup crypto companies. Now, I want to get back to this to close. What's happened? Well, what's rallying right now? Silver and gold are pushing. I wouldn't say they're blowing up, but they're definitely pushing. You're seeing people move from silver and gold. Now, I know from my platforms where I buy our silver and gold, it's increased in price, and delivery has now gone out 10 days to 2 weeks more. Supply is lower. You also have the U.S. Mint, right, who's supposed to mint our walking liberties and so forth, producing much more tokens. I wonder why that is. Why are they holding back on producing silver coins, what they call silver rounds, right? Another question. Put your comments down below. Let me know what you think. Why would the U.S. hold back on producing and printing and putting more silver out in the market? Well, we could, speculation aside, one could say, well, I guess I'm going to speculate now, hey, we need to hold on to this silver and this gold because we don't know what we're going to introduce, if it will work or not, right? And that's what the central banks are doing right now as they're getting ready to launch. Over 100 countries are looking at or preparing to launch now. You have about 16 countries now are preparing to launch a central bank digital currency, which will eliminate the paper money we have today. Is your local community bank safe? No. And if that's right from the mouth of Janet Yellen, who couldn't say, no, it's not safe, but she said, well, we'll decide. And if it will cause a greater run on all the rest of the banks to save the financial institutions, we will then bail it out. Well, how are they bailing this out? The FDIC does not have the money to bail all these bank accounts out. Remember, they have less than 2% of the total amount of money that are in bank accounts right now. So, what do? I have my money sitting in my bank. The money's not in our bank. And what do? You sit on it? Well, I don't know. There's other options, right? You got to have some cash. Look at gold. Look at silver. But what else has been pushing lately? Hey, you know what's happening right now? Bitcoin looks like it's becoming the hedge it was created for and launched in 2009. Gold, silver, and Bitcoin are rising. You don't see Ethereum following that. You see a huge increase in Bitcoin since the bank runs. Now you're also seeing that push in gold and in silver, your stable areas. And Bitcoin now is being looked at as something that, hey, I don't want my money in a bank system. I don't want to just hold it in dollars that's losing over 20% a year. And gold and silver, I can buy it, but it's heavy. And could the government come back in and try to make it illegal? So I'm going to go Bitcoin. Now, the downside to Bitcoin would obviously be to, once this overthrow, this overreaching of the governments is implemented into a digital ID, and you have to upload that digital ID to get on your internet to move any of your crypto, then they can control that, right? However, there is hope. And I'm going to do a video right after this one on which countries now, as the US creates this huge restriction to push crypto offshore, and we'll find ourselves behind in blockchain technology, Web 3.0, what countries are embracing it? Well, let's talk about that in our next video.